time for the word on Wall Street. Joining me now, Fairlead Strategies founder and managing partner Katie Stockton, Walser Wealth Management President Rebecca Walser, and Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Great to see you all. Macy's posting earnings just moments ago, reporting a narrower loss than expected and better than expected revenue. That stock jumping on the news. It's up 7% in pre-market trading. Lee, your reaction to Macy's, but also the world of retail, because the big ones get bigger. And what about the other guys?
You know, I was worried about Macy's because they're sort of the weakest of the group. This was nothing like when we saw Gap report earnings. I knew that was going to beat because they've got that after school or that good back to school sales, and also they have Athleta. But let me tell you, we need to see beats across the board on retail to keep this rally going. Now, I know the analysts are always going to say, hey, they're losing money. Macy's is a dog. I think Macy's is a dog. It's always going to be a dog. But what we're really keeping an eye on is how much surprise these retail stores are putting down. I mean, everything is beating right now, but I think it's going to be those specialty stores that are, you know, they're selling stuff that people want, casual stuff at home. But I think that it is alive and well. The only thing really holding back these places is the ability to reopen. But when you look at the e-commerce numbers and you look at how much is flowing through those channels, I mean, it's parabolic. It looks like Tesla stock. So I would say as long as we keep seeing these doggy retailers, the Macy's of the world, really beat on e-commerce, I think the economy is just going to show gradual improvement.
Speaking of the economy, the August jobs report's coming out on Friday. Rebecca, what are you expecting? What to watch?
Well, I think today is going to give us a little bit of an indicator, Dagan, with the ADP report coming out today. So we're looking for 950,000 today, which is up over the 167,000 that we got in July. And that will be an indicator. If we are getting good numbers today, then we're expecting Friday to be good. And we need a good indicator. But honestly, Dagan, I don't expect us to have these tremendous numbers because, as you know, the country is still mostly shut down. There are policies that are so sporadic throughout, and we're not back to sports. We're not back to theaters. We're not back to restaurants and bars en masse. So I don't see a huge hiring, even though we had ISM manufacturing come in, and those indicators are really good. The Commerce Department numbers all really good for orders. But at the same time, if we don't reopen, Dagan, we're not going to expect this huge job surge, because who's hiring on a mass scale when most of our economy is still on the service side and the retail side still shut down from the most part.
And speaking of the jobs report and moving into September, markets marching into September, looking to extend the August record run. Katie, can the markets keep up this pace if we see a slowdown in job creation, if we see a slowdown in the comeback?
I would say that the market's probably pretty vulnerable to any news that's not perceived positively. And I say that because, of course, new all-time highs have been registered by the major indices, and we've seen very impressive upside follow-through for the S&P 500 for one, which cleared final resistance at its February high. That follow-through has now generated an overbought reading in market sentiment. So sentiment has gotten accurately pretty greedy. So with that greedy sentiment, sometimes you get a tape that's a bit skittish and can turn on a dime.
Can you talk about the market historically ahead of an election, and given the backdrop now with the shutdown and the unprecedented stimulus coming from the Federal Reserve, can we read into, given the valuations that you're talking about, or the precarious state of the market, if you will, what might happen in the coming months ahead of the November election?
Well, I look at the markets from a technical perspective, right. So primarily focusing on things like momentum. Right now, the market still, of course, does have momentum. You can see it even this morning in the S&P futures. I do expect some downside volatility to unfold in the month of September before another up leg into the election. The election naturally is some kind of catalyst for the market. I think more likely to the downside, but just as a corrective phase within the scope of what is positive long-term momentum. And these breakouts that we have seen, whether it's the NASDAQ 100, the S&P 500, these are major long-term breakouts, and they bode well for upside follow-through, even if we get some downside volatility around that election. Oftentimes when we get these pullbacks, as difficult as they are to live through, they provide opportunities to add exposure. Right now, it's very difficult to justify chasing some of these large cap tech stocks that look so great from a momentum perspective, but have that issue in terms of the overbought reading.
Katie, great to see you. Katie Stockton, thank you so much, along with thanks to Rebecca Walser and Lee Munson. Great to see you all. Coming